everyone, and welcome to our today's KYC ML Guide webinar with a topic of mitigating false positives, significance of data quality in AML compliance tools. So, deploying a data analytic tool to assess money laundering and terrorism financing risks isn't enough. There is a need for a solution that would minimize false positive matches and to save time and costs to provide a comprehensive risk view relevant to different jurisdictions. One of the ways to overcome this is to improve relevant customer data quality available for verification. This webinar will explore how data-driven anti-money laundering compliance solutions tackle these challenges and the issues faced by fintech companies. I believe this webinar would provide some insights for financial companies on how AML screening and verification tools adjust to this problem, and respectively for KYC vendors to better understand what financial companies would like to see as a part of their customer screening. Today, KYC ML Guide brings together speakers from leading service providers like Complete Advantage and Revolut. Charlie and Alia, thank you very much for coming today. Let's give a brief introduction about yourself, starting with Alia.
Thank you, Ilmar. It's a pleasure to be here. I'm delighted. I am a global regulatory affairs practice lead at Comply Advantage. And prior to joining Comply Advantage, I've worked for the past 16 years in senior risk and compliance roles across traditional banks, foreign banks, and fintechs. And what that means is it gives me a very unique perspective on the challenges that compliance analysts, managers, MLROs are facing every day when it comes to managing their financial crime risks. What gave me the most frustration in those senior roles, especially as a head of compliance, where you're building out a program, is when the technology is not accurate, efficient, or effective enough for me to manage my risks. And when that keeps you up all night, you know you need to change it, which is why I decided to join Comply Advantage as a leading tech provider.
Perfect. Thank you very much. So, Charlie, go ahead.
Thanks, Ilmar. Excited to be here. Thank you for having me. So I'm Charlie Patterson. I'm the Group Head of Risk and Compliance for the business product here at Revolut. I've been at the company now for 3 years, and prior to this, sort of 13 years experience across the financial services industry. What we're currently dealing with now and what we're trying to focus on at the moment with fraud reduction, particularly in the ATO and APP space, but also in onboarding, has given me the perspective that I'm looking to share today. And also it's something that's very much at the forefront of our mind, somewhere that we can look to improve in the future.
Awesome. Thank you for the input. So let's start with our questions. The first questions would be related to data quality and false positives, negatives. So the first question would be targeted to Alia. So providing a high quality, detailed and up-to-date data is essential to minimize false positive and false negatives. How does Comply Advantage navigate the challenge of mining diverse, unstructured data and converting it to a structured form? And additionally, how can the quality of this data to be improved?
Thanks, Ilmar. So when we think about the data that we need to have access to in order to screen our customers, that data comes from various sources. They are directly from governments or intergovernment organizations such as the UN or the EU. They are lists that relate to sanctioned designated entities, politically exposed persons, their relatives and close associates, and other watch lists. Now, in order to collate all that data and keep it up to date in a near real-time manner, we use a variety of tools at Comply Advantage. Now, the first one, which is the most powerful, is our automatic data collection tools. These are run on a fixed frequency, which enables us to, within every minute, ensure that if there is an update to a sanctions list, that is being looked at and then pushed through production to the client. Now, having said that, you can use automatic data collection tools, but there's also a need to actually understand what is being, there's a need for a comparison. So when a list changes or we see that the data has changed from a source list, that is where we then have a SME from one of our data teams to look at what that change is, to ensure that the data that's come through is accurate, and then to push it to to the client. So you can see that there's a lot of work that goes into this. And just to give you like a quick outline of the teams, we have a team of international affairs SMEs. So these are people who hold PhDs. They are researchers, very much subject matter experts into geopolitical situations. And also, what are the sanctions laws that apply to each jurisdiction? Because the application of sanctions is very different. You will have the government issue a sanctions list, but the enforcement of those lists will be a different body. So understanding how sanctions laws go about. And then you have a data acquisition strategist team. They're the ones that are responsible for the automated tools, for the comparison tools that we use, and then also data quality specialist. A very important part of ensuring that the data we provide is accurate is ensuring that the source collection lists are providing data in the correct format. And often that is where the challenge comes when you are collecting data in an automated fashion. Not all of the files are the same file type. Not all of the data is structured in the same format across different jurisdictions. And even for the same jurisdiction or the same provider of a list, different categories of data could be missing, such as a date of birth or an address. And that is where we have researchers go and actually enhance the data to ensure that it's complete and accurate for our customers to screen against. Now, these are just the challenges on a vendor side, a data provider side. It's also very important to understand that when we mitigate false positives or when we are looking to reduce false positives for screening, it's not just the data that the provider is giving. It is also the data that you are using on your customers in order to screen against the data lists. Oftentimes, clients have a very streamlined onboarding process, and they will just screen the name that a customer has given them without any other kind of data attributes, such as a date of birth or a place of residency, nationality. And that does result in a lot of false positives. So in order to ensure that you're really reducing those false positives, and I know we'll get into that later, it's important to ensure that you're actually using data that's collected after your identification and verification, your eKYC processes, that you have in place to ensure that the name can be as accurately matched against the sanctions or other watch lists.
Thank you very much. It seems like you're really doing quite a detailed work with collecting the data and relevant sanction lists, etc., especially nowadays when the sanction lists are constantly expanding really quickly. So it's really important to monitor those. So next question would be for Charlie. And do you think that existing AML money laundering solutions are capable of providing effective risk screening through high-quality data, especially for a diverse payment service provider like Revolut? Could you maybe also elaborate on maybe what service are you using and what are the challenges associated with it?
Yeah, sure. So currently we use Onfido. And I don't want to disparage Comply Advantage, right? We haven't used Comply Advantage, but I would say that at the moment there is no one size fits all solution out there, right? Like it's very much the situation of, I mean, if you watch any of those sort of Netflix documentaries or old kind of crime drama in America, where one state had registered a serial killer and another state had no idea it was going on and allowed the crime speed to continue, right? Until everyone is sharing data and we have this kind of ecosystem that encompasses a global and cross-functional and cross-institution setup, we are not going to know exactly all of the information out there. So at the moment, no. I mean, the main pain points that we have with Onfido is false positives. It is not necessarily having complete sets of data when they come through to us. And I think the same kind of issues that Alia was mentioning, the data comes through in different formats, the data comes through at different times. It's not necessarily exactly what we're looking for. And especially now as we move into the realm where we're getting deep fake KYC selfies or KYB selfies, moving into the space where we're going to be getting deep fake KYC video and things like that. To actually know what we're looking at, we need to have that really broad ecosystem that has data coming in from all different angles.
Yeah, fair enough. I would agree with you. I heard this opinion many times that the only way to really tackle, let's say, overall money laundering schemes would be to have basically everybody connected and every data kind of available to the private sector. But at the same time, I mean, there is GDPR and data secrecy, and a lot of people are really against it, which is also completely understandable.
Yeah, it's very difficult to actually put it together. And I was speaking with LexisNexis earlier this year, who are looking to develop that kind of ecosystem, using a lot of their tools, but then they're also expecting governments, financial institutions to input their data. And that's where the barrier to entry is. People don't want their data shared, just like you said.
Okay, so let's go deeper into PEP risk levels, for example. So, Alia, given the absence of one-size-fits-all approach, what is the optimal way to manage politically exposed persons PEP risk levels?
Yeah, that's a great question. So essentially, the way a firm needs to manage their politically exposed persons and the risk that comes about with that is to understand firstly that the risk of a politically exposed person is not because they're politically exposed themselves. It is critical to understand it expands just sorry, I lost the word. It's not just about the PEP themselves. It's about their relatives. It's about their close associates and people who are connected with them that might potentially be involved in bribery and corruption risks. But then also the country that the politically exposed person is based in, what their actual role is, what is their power and their influence both internally and externally. So there are a lot of factors that you need to consider beyond just identifying that you have a PEP customer. There's the enhanced due diligence that takes place after that. And I think sometimes where firms get themselves into challenges and bottlenecks is where they don't have a process in place that links the identification of a PEP into, okay, the enhanced due diligence of a PEP, which does require processes such as your senior manager to sign it off. It does require you to have a PEP register in place so you can keep track of the population of politically exposed people that you have within your firm. And it also means that you also need to take into account different jurisdictional requirements on the treatment of PEPs. So a lot, often we hear the term once a PEP, always a PEP, but that doesn't apply to all jurisdictions. So for instance, the UK, we've recently seen last year how they moved away from treating domestic PEPs at an equal level as foreign PEPs and have now said domestic PEPs are a lower risk. You treat them as a PEP for 12 months after they've left office and then no longer thereafter. In other jurisdictions, for example, once a PEP, always a PEP, there are other jurisdictions that haven't even provided any kind of hard guidelines on how you should treat a PEP, whether it's after a specific period of time or whether you should treat them as once a PEP, always a PEP. So it's very important that firms understand whether they want to take a global approach and have a global policy with different derogations in place for the different jurisdictions and have exceptions thereafter. But also now thinking about how you risk rate a PEP from the angle of a foreign and a domestic PEP. I mean, that's something that is not just being triggered by the changes the UK has made. If we look at the European Union, they've taken a very different view. They've actually said that for politically exposed people and their relatives and close associates, you now need to also identify siblings. They're also higher risk. So they're taking a more stringent view than the UK is. So it's very important that firms now take whatever PEP inherent risk assessment they're doing and look into splitting that between their domestic and their foreign PEPs. And then also consider the jurisdiction of the PEP itself when it comes to the country risk factor of that customer. How is that country when it comes to bribery and corruption? Are you looking at country risk methodologies or risk scores from institutions like Transparency International or the World Bank? Not just FATF, right? Because FATF is not going to give you an overall view of what are the bribery and corruption risks within a jurisdiction itself.
Thank you very much. I think also for the FATF, it's like a rule of thumb. If you work internationally, you kind of take the riskier approach from all the states you work with. So maybe also, Charlie, you could elaborate on that since Revolut kind of works worldwide. And also on top of that, I wanted to ask a question regarding the banking decisions. So what are the challenges in making the banking decisions based on adverse media screening? So if you could elaborate on PEPs and on that as well. Thank you.
Yeah, sure. Yeah. So, I mean, exactly as Ali was saying, we have a custom setup where we view our PEPs based on the territory that they're from. So like that opinion that you were talking about, where if they are a domestic PEP and then they no longer are after a year, but within Revolut we take the more prudent approach where we know very well that there could be bribery and corruption still happening after that, especially with the kind of roles that politically exposed persons tend to move into afterwards, becoming the part of the board of directors of a financial services company, for example, or becoming a lobbyist or something like that. So yes, we very much take a custom approach with the idea that the minimum that we have is the maximum out of all of the territories. When it comes to adverse media for debanking decisions, you have to be very cautious. So we all know that media is becoming less unbiased, and that stories can be inflated. Misrepresentation happens all the time. Misinformation is shared by everyone. We know from experience that the debanking decisions that we've taken in the past based solely on adverse media have not necessarily been the most solid decisions that we've made. And those can have a knock-on effect to our reputation, to our business, and ultimately our P&L, right? So now, essentially, if you're looking at adverse media screening, it needs to be paired with other information. So we need to be reaching out for requests for information from the customers or from the business. We need to be looking into our databases, do some more the extra transaction monitoring and things like that. We can't just take it solely from the face of a news article that's shared online. It's not prudent, and it would lead to a lot more false positives and false offboardings.
Yeah, as you mentioned, clearly adverse media is a bit of a gray subject in the KYC field overall. So how does Complete Advantage issue alerts based on adverse media searches, particularly when distinguishing between smear campaigns and factual coverage? And I have some of my friends are working in bank sector as like AML officers or heads of AML. So I heard the opinion that there is definitely a need of a good adverse media check. It's quite complicated for KYC solutions to do, and it's quite costly as well in a way. So if you could also elaborate a bit on that.
Yeah. So at Comply Advantage, we use machine learning and AI and in the form of large language models to essentially identify news articles which relate to specific adverse media categories that we have. And these can range from things such as regulatory actions to violence to nonviolent crimes to financial crimes, and also the 22 predicate offenses that relate to money laundering. Now, one of the important things with using machine learning when you're doing this is that it's not always going to be 100% accurate. So whilst it will be good at distinguishing news articles which might relate to a customer's name, but they are more of a victim as opposed to a perpetrator of an offense, or where they have just been referenced with another word that might link to terrorism or it might link to, let's say, violence, but they're not related to it. That's easier. But when it comes to smear campaigns and what is fake news, what is real, that really depends upon the source collection and the type of media sources that we use. So we often only use, reputable media sources, but there will also be tabloid news. There will also be blog posts that we provide. And we do categorize it for our clients. So when it comes to how a firm then uses that adverse media screening, they really need to understand, well, where's the source of this article coming from? Is it from a reputable news source? Which country has issued? So what country's newspaper is this? Because again, different countries might have different smear campaigns against different countries if there are geopolitical tensions. And then also, if it comes from like a blog post, is that a reputable blog post? There are lots of reputable ones like the Dark Money Files. You could have the Panama Paper leaks, all these other kind of blogs that are out there that does give a certain amount of credibility to the information they provide. But then there are other blogs such as Wikipedia, which anyone can go on and create a kind of a persona for themselves or write a smear campaign. And that's really where it's the analyst and the investigatory work that plays an important role once an adverse media alert is initiated. But then, of course, if you're bogged down by so many alerts and there are false positives, it's really hard for your analysts to know where they need to focus on. So It's always important to recognize that adverse media is an enhanced due diligence measure. And oftentimes it can be used, let's say, as an ad hoc screen where you identify suspicious transactions, for example. But it is something where you need to kind of have your analysts understand, based on a customer's existing risk, how much investigatory work do they want to do off the back of a news article. That's something where the technology cannot help with. It's more human intelligence and investigatory research.
Thank you for the clear input on that. Let's go on also an important subject for basically any financial company, which is employee training on potential hits in AML. So, Charlie, how does Revolut train its employees to investigate potential hits and identify false positive in their solutions?
Sure. So I'll talk about the setup that we have first and kind of how broad our support teams are. So support makes up a huge chunk of Revolut employees. It's probably about 40% of the 10,000 employees that we have now, maybe slightly more than that. And those are split across several different areas. So we have the standard kind of support setup, the people that you'll reach through chat, and then we have the specializations that come after that. So teams that will help you out if you're in a live account takeover event, for example, or the teams that we're talking about here, which would be the FinCrime Investigations Unit, so FIU. Every single one of those areas gets a huge amount of training. And across Revolut as well, we have the stance. I think that like most companies, probably this is similar to Comply Advantage and KYC AML, is that it's every employee's responsibility to be mitigating fraud and to be recognizing risk when it occurs. So we have really strong mandatory training that's across the company. But then also for those particular areas, and specifically FIU, they receive enhanced training on what to look for, previous examples, case studies that we've been able to get from the industry. And then we also have a network of support for them. So we have first line risk and compliance managers who sit within that team and are able to provide any kind of queries or responses to anything. Then we also have our second line. And second line, when it comes to FinCrime, is again pretty big. So you have your standard sort of oversight of operational risk managers. But then we also have FinCrime compliance specialists. We have FinCrime legal specialists and people like that. Decisions aren't made on the completely off the back of one support analyst's decision. So it would typically be escalated from there if you're looking to do something like debanking someone or maybe refunding a large fraud loss or something like that. Or if we're looking to actually say, yes, this is a sanction, then we're going to offboard a whole business. Typically, we have a lot of backup for those people to make sure that their decision is validated. Because as Alia was saying, there is a human element. We can't just solely rely on data. So we need to make sure that we have experienced people reviewing all those decisions.
Thank you. There for sure will always be a human element. I don't think that automation can completely, let's say, leave us jobless. But given your scope, I think Revolut is totally covered based on your explanation. So regarding automation then, so while fintechs and banks deploy automatic data solutions to simplify compliance and reduce manual screening costs, to which extent do these solution providers rely on manual researchers for data extraction? Alia?
You need the manual researchers, not for the data extraction. That can be automated, and wherever things can be automated or technology can be used, we should use it. The manual researching work comes into play where we are either performing spot checks, quality assurance checks, whenever there is a change to an existing sanctions list. So you can imagine that does happen quite frequently in the current climate we're in. Part of that manual intervention is to understand, well, what has the change been? To ensure that we are fingerprinting that change. So that is basically, fingerprinting is where you're just capturing a screenshot or keeping a record of what the previous sanctions list was, what is the new one, what are the changes, because again, that is often requested by clients as part of an audit or as part of like a regulator coming in wanting to see evidence that you're actually screening your customers, you're doing it on an ongoing basis, or they might even just give you a name of a customer and be like, can you evidence that this customer was screened and against what list? It's also very important to use those manual research techniques when it comes to identifying sanction-related entities. So if you think about the OFAC 50 rule, being able to identify any other entity or individual that's connected to a designated sanctioned entity. But then also in the realm of politically exposed persons, you need to do manual research to understand who are the family, relatives, and close associates of that politically exposed person. And that is where our international affairs team really come into play, because they are keeping a track on all kind of local elections that are happening. Recently, we've seen India's 6-week-long election. So, the team are very much keeping on track of, okay, what is happening? Where are elections taking place? When are the results being announced? Who are these people? Because they're building it into our data. And it needs to be as quickly done as possible post-election, so that firms can then identify new politically exposed customers that are on their books, or have ways to manage customers that have stepped out of office, keeping them as a PEP, like Charlie said, if you have kind of a global approach to managing PEPs, or then kind of flagging them to be removed as a PEP after 12 months if that is what your policy is. So that the manual research work is never going to be replaced. It's super important to ensure that data quality, efficiency, making sure that the tools are running effectively, that there are no kind of blockages. Certain sources that we take sanctions lists or other kind of data from, they have restrictions when it comes to the use of automated tooling or scraping of their website. So that could block the tools we use. So again, making sure that everything is functioning appropriately. It's essentially almost like compliance monitoring and testing, but on a vendor side and over the data collection process.
Mm-hmm. Thank you for that. And Charlie, so a question to you. What kind of clarification would you expect from a solution provider to better investigate and resolve false positives? Maybe some specific customer descriptions or any other data required?
I think it's difficult to answer that succinctly, right? I think what we expect from our providers is probably a lot, right? And I think any fintech, any bank, we are expecting a huge amount from our providers. What I would expect is that the data that they've shared with us is everything they have in the format that we want it to be. So when it comes to clarifying false positives, we would probably work together to do that kind of thing, rather than rely on them to have any extra data that would then be able to identify the false positives. If they shared everything with us already, then we should have everything already. So it's more a case of, that's where it comes into, as Alia was saying, it would come into our human side of things. We do that investigation, we recognize the false positives, we recognize those hits, and then we just scrape them from the database and make sure that customer doesn't have any flags raised against them.
Thank you. So coming on top of this topic as well, so Alia, could you maybe elaborate a bit on, let's say, transliteration errors or similar types of issues that could kind of influence what you transfer to the finance industry or banking industry, and how it could also basically be an obstacle in the AML?
Yeah, so I'll just go back to the point Charlie raised, where there is a lot of expectation from firms on vendors, but I think that's entirely acceptable. As a vendor, you want to ensure that the data, or if you're providing a screening solution or a case management platform, that's working for your client. And your one platform or your data set is not going to work the same for every client. There needs to be different configurations and flexibilities involved in the solution in order to fit a client's risk appetite, but also the risk-based approach that they have in place. And I think that's where a lot of, from my end, a lot of the work I do with our clients is to help them identify firstly, what is the cause for all the false positives. We have teams of customer success managers, account managers that are assigned to clients, and they're regularly on a monthly basis looking at the hit rates and the match rates of our clients. So we're being very proactive and actually going out to our client and saying, look, you've got a very high rate of false positives. Let's do something about this, and not just waiting for a client to reach out to us. As part of that, we do a lot of benchmarking and testing, where we first look at how has the client categorized their customers that they're screening? Have they taken a risk-based approach? And when I say a risk-based approach, what I mean is, are you just screening customers with different data sets based on their risk score, or are you actually going a bit more granular and identifying segments of customers based on the products, the channels that they're using? We need to think about digital assets now and the crypto products that are being provided by firms. Those have a very different risk ball game than you would with your fiat currencies, right? So your screening really needs to be tailored to your customers. What jurisdictions are they based in? And that's where it comes into things like the transliteration errors, naming conventions, because when you've segmented customers, then you're able to apply those configurations on top. Now at Comply Advantage, we already have those configurations applied for transliteration errors, for different naming conventions, for non-Latin names, such as Arabic names, different patronymic names, where, for instance, you might have a father's name attached to the customer's name, or even a mother's maiden name. So being able to differentiate those. And again, you can only, and that's just a standard. A lot of vendors have those as little add-ons. That's a standard that we have to reduce all of the false positives for our customers to begin with. But the real kind of work is working with a firm, working with our clients, and helping them understand how they can segment their customers to have effective screening, not just for their sanctions, but also for politically exposed people, and also adverse media, where you might potentially want to take specific adverse media categories and not screen against everything. It is a challenge, because you do need the client to be receptive of wanting to adopt a risk-based approach, be lateral thinking in how they're going to reduce their false positives, and not always expect that it's something that the vendor is going to solve for them. Because whilst we can tailor the technology and ensure the data accuracy, it's really how you're running your internal processes and program that results in good matches that result in suspicious activity being detected.
Yeah, thank you for your explanation. I think that definitely Comply Advantage has a really tailored and individualistic approach to their customers. Therefore, Charlie, could you please explain what are the most, let's say, sought after features for Revolut when they're considering an anti-money laundering solution?
I think it's going to be a combination of 2 or 3. So completeness of data. So really looking for something that has that global approach in the same way that we approach everything globally. Ease of use. We want to have easy API connections into our systems. We want to have data that's easily investigated by anyone, alerts that are easy to read and easy to respond to, that kind of thing. Price, of course, comes into it. But I think probably the third more important reason is having a very collaborative approach. The same way to, as Alia was saying, we want to have those performance meetings on a monthly basis. You want to be working together to improve a solution that is bespoke to us. That's the best way that we can then provide a service to our customers, and that we make sure we're getting the right service from our provider at the same time. But I think number one still has to be the global approach. If it's a company like Revolut that is in many, many territories and looking to expand into more, we need to have that data from everywhere to really know what we're doing.
Good. I hope that the KYC vendor providers are now writing down those points. But based from my experience, I think most of the, let's say, financial industry, they want like as biggest package as they can achieve for the lowest price that they also can have. So this is like the kind of main usual rule in choosing AML provider. But let's talk a bit about more specifically like the search engines and how it all works. So Alia, what indicators does Comply Advantage use in name screening outcomes, and what is the approach to using a fuzzy matching logic to help onboarding officers detect and further investigate false positives?
Yeah. So when it comes to name screening, you essentially, in order to identify a target, you want to ensure that you are screening against a full name, a date of birth, and a country factor, a country data point at the very minimum. If you're not doing that, the chances are you will be getting a lot of false positives. So that is something that we definitely ensure we provide to our clients. And where it's not listed, we enhance our data to ensure it's listed. One of the kind of key points here when it comes to kind of, how is fuzzy matching applied. It's very important to note that fuzzy matching logic is going to be different from one vendor to another. Even if you go on the OFAC website and you want to do a ad hoc screen, they even have a fuzzy matching slider. The way we do it at Comply Advantage is we use the Lichtenstein formula, but essentially, to kind of break it down into a high level understanding for the audience, it's fuzzy matching is how tight do you want to screen a certain name? Is it going to be an exact match? Do you want to have a match which could take into account different characters missing, or kind of like last name first and then last name before first name, or kind of differences with aliases? All of those things are built into Comply Advantage's screening solution. So we make it very simple for our customers. You don't have to think too much about it. And it's something where the team supports them with the implementation on. When it comes to sanctions, it's always good to have, a moderate fuzzy matching. You don't want to be too tight because there could be aliases or other kind of names, with the way the name is typed or written, that could exclude certain characters that might not match. Whereas when it comes to adverse media or politically exposed persons, you might want to have a tighter matching. So you might want to be kind of closer to an exact name match and take that risk-based approach. And some clients are nervous about using things like fuzzy matching and different configurations because they're afraid they might miss true positives. And that is why they usually apply one configuration to all of their clients. But that is often what we're seeing as the cause for those false positives. It's perhaps a lack of confidence or a fear of taking a kind of a risk-based approach that we really want to help clients overcome. And it is the only way you're going to reduce the number of false positives. You cannot screen every customer in the same way against the same kind of fuzzy matching or the same configurations. It's why we're seeing the industry really kind of struggle with all of these false positives, and it takes your analyst's focus and attention away from actually investigating risky alerts. That is something where Comply Advantage helps when it comes to reducing false positives from a transaction monitoring aspect, where different transaction monitoring alerts are prioritized using artificial intelligence and machine learning, so that when it comes to an analyst, they can quickly kind of see, okay, what are my higher risk alerts? Let me look at these. When it comes to name matching, the closest you're going to get to that kind of functionality is a match score. How closely does this name match with this alert? And based on that match score, you could potentially have your analysts remediate alerts in a prioritized fashion.
Mm-hmm. Thank you very much for that. So since Revolut is quite a universal, worldwide operating company, should an ideal anti-money laundering solution offer global coverage or jurisdiction-specific data coverage?
Global. Like I know it's going to be a very short answer because global is the only way really to approach it. Yes, you can obviously have different verticals of, we specifically want to look at this jurisdiction for, maybe we've seen a spike in fraud, or we've seen a spike in poor onboarding or onboarding of bad actors or something like that. So we want to have the ability, I think, to customize or to at least see the different data as it's coming in. But there needs to be a global approach. We need to have a global data set that matches with our own internal models, which are also based on a global position. Our transaction monitoring takes the data across all of our products and all of our customers. And at the moment, we're around 40 million retail customers spread across the world. So we need to know the data across all of them, because any of them could be sending money anywhere or sending money to each other through the app. And we constantly see issues with even customers that have passed KYC and KYB, that kind of thing. There we see accounts being resold on very open Facebook pages, Instagram pages, things like that. So you need to have a global approach to be able to tackle those things.
Mm-hmm. Thank you for that. So then we will go to basically challenges from the vendor perspective. What are the challenges in building a data solution aligned with a risk-based approach, considering that the person risk profile may vary across different jurisdictions? I think we already kind of mentioned it more or less, but you could also elaborate a bit on this. Maybe we can talk a bit about also, let's say, fraud prevention, the topic that hasn't been highlighted so far, at least.
Yeah, sure. Just before we get on to that, I was just gonna carry on from what Charlie said about, like it's so significant, not just in terms of regulatory fines, but also the ability to grow and scale a business when you don't have the right AML processes in place, especially when it comes to screening. Like a great example is N26. They were fined, I think it was almost over 9 million by BaFin. But what kind of caught me was that they had to limit customers sign up for 2 years. That's 2 years worth of revenue that was impacted because they just didn't have their house in order, which hopefully now they will do. Now, from a vendor side, the challenges, it's not really a challenge to create a solution which allows for firms to adopt their risk-based approach, because you build a solution that is configurable and flexible. But building that solution, you still need to understand what are the specific risk factors that a client is going to consider when they are, for instance, risk rating their customers, prioritizing different transaction monitoring alerts, or even when it comes to initiating those enhanced due diligence processes. If we kind of think about how risk-based approaches are currently applied, it's usually when it comes to the customer risk score. What is the customer? Is it an individual? Is it an entity? What is their occupation? Where do they operate? What kind of countries do they have a nexus to? What are the products they're using us for? What are the channels they're using? Building out kind of like that kind of a solution, which we have at ComplyAdvantage, our customer risk scoring, is easy because you put in the factors and it's for the client to determine what suits them. But we take it one step ahead of what is being done. We have an advisory angle where we will help clients define what those risk factor scores should be, what different types of country risk models they should use based on their jurisdiction and their global presence. So really helping them think about, define, and then implement what would be their risk-based approach going forward. Now, of course, when you think about the more mature, larger firms, they already have a really well-defined risk-based approach. They know what they want. They just want the technology to do what they want. So they have a very kind of firm set of requirements. So it's quite easy to then meet those requirements. The challenges come about where you have smaller fintechs, startups, challenger banks that haven't really matured or yet quite understand what is the risk-based approach they want to take. And oftentimes when they're looking to adopt a risk-based approach, the most important thing from a vendor side is having them, providing them the ability to then test what the solution is or what the configurations are that they have set up for that risk-based approach. Test it before it goes live into production, make changes, do more above the line, below the line testing before it gets pushed out. And then ultimately make it self-serve as well, because clients want to feel empowered. They want to be able to make changes themselves. And you can only do that if you have a fully auditable solution as well, which comes down to kind of, we always need to think about the audit and the compliance monitoring and testing to rationalize why a risk-based approach was taken in the first place.
So could you also elaborate a bit on how vendors in KYC field could also help to tackle fraud? Because it's more understandable about anti-money laundering and sanctions checks, but precisely about fraud.
Yeah, so from a KYC vendor specific perspective for fraud, it's very much being able to identify those deep fakes, fraudulent documents, ensuring that as the world moves to more kind of video selfies, which can also be deep faked, ensuring that their technology is able to kind of keep up with the technology fraudsters are using in order to identify that. But identifying fraud is not just at the KYC stage. You might miss something at KYC and onboard that customer, which is why the transaction monitoring and the fraud detection processes are equally important. And I always believe in a world where all of your KYC, your ID&V, your transaction monitoring, and your reporting solution is all in one. It's because when you use siloed platforms, it's very difficult for analysts to make sense of things. So again, think about what is your fraud team using versus your kind of fin crime AML onboarding team. Do they have access to the same solutions? Do they have access to the same data? Or are they using completely two different systems and not talking to each other? There's a lot of internal work as well that firms need to think about, beyond just what the vendor can do for them.
Fair enough. Thank you for that. So, Charlie, since Revolut offers diverse services from I don't know, multiple currency accounts to travel insurance and even cryptocurrency. Do you think existing compliance solutions are adequate for such a dynamic fintech as Revolut?
Yes and no. So I think there is a lot of options out there, and there's a lot of really good suppliers and vendors. But like I said before, I don't think there's that one size fits all approach. I think it's the same thing that we've been discussing probably on a few of these different questions. You need to have a strong ecosystem. So not just what your vendor provides to you, how your staff are trained, how they're going to respond to things, what models have you built internally to be able to recognize transactions that are fraudulent, what have you fed back to your vendor, especially when you're developing new products, especially in the fintech space, when they may very well be products that break the mold or haven't been seen before, that kind of thing. And I think also importantly, it's kind of off the back of Alia's last point, is what controls have you got for the ongoing fraud monitoring, and how do you protect your customers? Because having that fraud monitoring from a vendor can only take you so far. There are always going to be people that slip through. There are always going to be customers who you can't necessarily protect from themselves, who will end up in an account takeover situation, authorized push payments, that kind of thing. So what controls are you maintaining on your side that helps minimize that as much as possible? Do you have account limits? Do you have a panic button where customers can freeze everything as soon as it occurs? Do you have limited virtual card creation? It's all those kind of things that also need to be thought about, in the sense when we come to that sort of holistic ecosystem, from onboarding all the way through to full fraud lifecycle management, through to the controls that you have for when inevitably someone slips through the cracks.
Thank you very much. So since it was mentioned regarding the Revolut, every company has its own scope and the way they work. So how is it for Complete Advantage? Do you really offer tailored data testing approaches to each customers?
Oh, absolutely. So, like I said, all customers have customer success managers, and one of their roles is to, on a regular basis, look at the hit rate, the match rates, how is the system being used, how many true positives are being identified versus false positives, and to work with the client in reducing that. Or if, for instance, they are expanding into a new jurisdiction, or they've informed us of new different types of products, working with them to ensure that the system is tested for those new customer types or products before go live. And then our larger tier clients have account managers that do the exact same thing on a more weekly basis, on a more regular basis, a monthly check-in, to ensure that they're getting the most out of it. And I think that's the most important thing. Oftentimes when I've been in a situation working with vendors from kind of the client side, the implementation happens and then you're just kind of let go and go get on with things. And that's really concerning when you're in the compliance role, because you still need to get familiar with the tech. You might want to kind of block onboarding for certain types of customers, and if you're using transaction monitoring, you want to kind of implement that within the solution, and you need to know who to reach out to and who to talk to, because these are critical processes that vendors like Comply Advantage are helping clients manage. It's not just about providing a data or a UI platform for them to use. It needs to be functioning and working. I think a lot of times as well, when you think of the larger clients, they build their own transaction monitoring internally. They have their own kind of customer onboarding solution, which is built internally. And really, they only need the vendor for data or API calls of data. So again, it's very important that we work with the client to understand how their internal kind of back office systems are designed, or their kind of transaction monitorings combined, because it all links together. You can't have one operating without the other. You can't do transaction monitoring without understanding who your customer is, or what are the kind of customer screening alerts that are coming through, what is the adverse media being seen. And I think that's where, especially what I've seen in my career, it's those siloed systems and processes that cause a lot of friction and give poor outcomes when it comes to investigating alerts as well.
Thank you for such a precise answer. I think I'm out of questions at this particular moment, and we're really closing to the end of our webinar hour. So before we end this, I just wanted to also ask, what are your thoughts on the future of false positive mitigation and overall in the fintech and KYC vendor field and its development? So Charlie would go first.
I think Alia will probably answer this better than me, being that part of the company that would develop it. But I think what would we like to see, right? And what we'd like to see is moving towards that setup that we've discussed, is moving towards that ecosystem. I think it's very difficult. That is like almost a pipe dream at the moment, to have that shared data across multiple jurisdictions, across all financial services companies. But that's ideally where we need to head to. And the speed of things is definitely picking up when it comes to development, not necessarily towards that point, but I think towards the point of trying to stay one step ahead of the fraudsters. And so we've seen, particularly with deepfake selfies, deepfake videos and things like that, we were a step behind, or at least our providers were a step behind, and the reaction that we had to it was a step behind. That is changing. Companies are now starting to get on the front foot and start to get ahead of those kind of things, especially as AI becomes more prevalent. So yeah, I think the future that I'd like to see and the future that's coming are two different things. The future that's coming is still very positive. The future that we'd like to see is a long way off, I think.
Hopefully. Thank you. Alia, what are your thoughts on the future?
So I think we're working, we're definitely seeing a move towards a future where there's more willingness to share data, especially when it comes to the fraud space, between vendors, between governments. I mean, discussions are happening, and I'm hoping that, it gets to a point where even if it's for select use cases, data can be shared, such as the EU have done, where specific data can be shared across the financial intelligence units of the countries, not necessarily to private institutions. But again, it's all part of the wider mission of preventing and stopping financial crime. I also see a world where a lot of clients are building internal solutions when it comes to fraud detections. They are really harnessing and embracing machine learning and artificial intelligence and building out these models themselves internally, as opposed to relying on a vendor. And I think that is fantastic, but that also opens up a lot of risks when it comes to how models are being validated, how models are being monitored, when it comes to model risk, biases, etc. And I always come at it from a position where, as a business, you should do what you do best as a business. If you're a financial services firm, you're providing financial products and you're helping customers manage their money, make money, save money. When you're on the vendor side, your entire role, job, and mission is to create tech, to have data that can help firms identify and prevent financial crimes and other types of risks. So essentially, you have more monitoring going on, you have more testing going on, you have a lot more people to answer to, you have regulators, clients, third parties. From a client's perspective, you're building out all of these advanced technologies. You also need to monitor it. You also need to be able to evidence to a regulator that there's no bias, even unconscious bias involved in your processes. And if something were to fail, again, you need a lot of resources and engineers to make sure things are running smoothly and are working effectively. And I think that's an area of risk that clients of firms aren't really thinking about, because there's so much risk that they need to tackle. It's the fraud risk. It's the reimbursements now that need to be made for certain types of fraud. It's all the different types of high-risk customers, sanctions evasions. There's just so much to grapple with that I think sometimes you need to take a step back and see, okay, what do you currently have and how can you improve it? And who can you work with to improve it quickly, as opposed to trying to do everything yourself? Yeah.
Thank you very much. A lot of really great points. Thank you both for sharing your insight on screening specifics, significance of data quality, and how to mitigate false positives. We really hope to collaborate with you in the future with both Complete Advantage, Revolut. It was an honor to have you, Alia, and you, Charlie, today on the webinar. We hope that our guests also enjoyed tremendously this discussion. And we would really appreciate if you would leave some feedback in the comment section. And we really hope to see you on our next webinar. Thank you all and enjoy your day.
Thank you.
Thank you.
Okay, bye.